Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. So this video is another binary options trading, binary options strategy video, yes, and IQ option strategy video based on those kind of concepts which I have explained in my ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you'll find also the price action bible with much more deeper explanations of those kind of concepts which I have explained in the price action guide, and the link to the Facebook group, which you can find also in the description. So before we are going to discuss those trades which I have already done, like I'm doing them always on the weekend when I have no OTC market available, because I'm a European trader and OTC market is not allowed for European traders. And so I'm doing this deep educational videos where I'm going to discuss those trades which I have already done, and in general why I took those trades, which kind of concepts are important to understand out of my ebook for this kind of trades, and what you should do and what you should avoid to don't enter into trades which result in and out of the money. And before I'm going to do this, I have already explained a lot of concepts which are not only important for your trading, but also for those one who are joining the BOTT mentorship program and are or want to join the BOTT mentorship program and the application process. Yes, because those concepts will be also important for this application process, so that you have at least a fundamental knowledge about some concepts. Yes, so that when we are going to talk about, or when I'm going to talk to you, yes, that you understand what I'm talking about. Yes, that is important, because most of the traders think that trading is a game. Yes, and so they don't need to learn anything. Yes, but this is completely wrong. You have to know at least a basic stuff. Yes, and that are those concepts which I have explained in the previous video, and which I'm doing also explanation now in this kind of video, because those concepts are important. The first one are almost those one which I have named there, and also the candlestick pattern and chart patterns, which should be at least the first ones you should know. Yes, you don't need to know all the kind of candlestick patterns and chart patterns. Yes, but you need to know at least the most important ones, that are those ones which I have named first: dojis, evening star, morning star, engulfing candles, pin bar, yes, hammer, inverted hammer, and yes, and that was it already. That are the most important one. And then also the chart patterns, the head and shoulders pattern, the double top, double bottom, yes, and then the triangles, the wedges, the flags, and the broadening channel, yes, that are, and so obviously the trend channel, yes, so that you understand at least where the market is, and what kind of trading range market is moving. Yes, and then obviously the other concepts where I talk about the 4 keys, the fake breakout, the rejections, the candlestick math, yes, and market condition. Yes, because such kind of videos and concepts about the market condition are really undervaluated, and most of the traders are doing wrong trades because they do not understand the market condition and the trend. Yes, so, and then obviously understanding reversal and retracement, and then one of my most important concepts, the highest probability trading setup. This is a concept which you can apply at any kind of financial instrument, from FX options over digital options to Forex and binary option. Yes, only that you have to apply this a little bit different. On Forex, you enter immediately here after the reversal candle with a stop loss above this, and then you trade this kind of swing. Yes, and on binary option you wait to get some kind of evidence that the trend will continue. That are the main difference, yes, in the approach how to trade this highest probability trading setup. This highest probability trading setups are almost based on the 4 keys: the trend, the key level, the candlestick pattern, and the rejection. And this will produce at least 80% win ratio if you apply this kind of concepts on the right context. So, and apart from this, also this kind of stuff here about the overbought and oversold area, yes, because that is almost the reversal areas. You see how the overbought and oversold area will move depending on the trend, or if you are in ranging market. Yes, that is also important that you know this, because you will so spot easily in what kind of market condition you are in there, because often if the price will reverse immediately at the Bollinger Band, it's almost a sign that there we have a ranging market. Yes. Okay, so then obviously market conditions, support and resistance can be not named often enough. Yes, how to spot major and minor support and resistance. This is made only on horizontal support and resistance, but you have to understand that this are valid for every kind of support and resistance. EMA, Fibonacci level, Bollinger Band, middle Bollinger Band, 1 deviation, all support and resistance level are working like this minor and major support and resistance levels. And the majors one is almost confirmed after the side touch of a minor support and resistance levels. So then how to trade those kind of breakouts of the support and resistance, fake breakouts mostly. Yes, I have shown you this on the previous video, how they look like. The most tricky one is the railway tracks fake breakout, which is almost impossible to spot only by a few things like the distance between the support and resistance level, yes, and of the run and the movement of the running candle. So then how to trade them, how the zone of support and resistance, the change of polarity is defined, yes, and then one of the most and the best ones, yes, that are how to draw support and resistance based on candlestick patterns. And here it's important that you can apply this to each and every candlestick. These are only a symbol for those kinds of things like gravestone doji. Here we have a dragonfly doji, or every candlestick in between. Yes, you have seen on my live trading videos how I use those kind of things often on other candlesticks. I have explained this kind of support and resistance lines based on candlestick pattern much deeper in the price action Bible, where I have written down how you have to trade those kind of things, yes, and how you spot them. So then obviously the progression of the candlesticks that are ideal, yes, that means that this is without getting in consideration the trend, the key level, yes, that is only the candlestick patterns, yes, what they are telling you depending on the candlestick and the wick size and the closing price in relation to the complete candle, how much pressure they are forming. Important here is that those wicks here are forming a resistance, yes, and the lower shadows are forming here also on those kind of candles the support level. The same is valid for the bearish candles, yes, it's the same. Here we have support, and here we have resistance. So then how you have to do your analysis, yes, and then the other three concepts, which makes again part of the application process of the BOTT mentorship program. The prediction of the next candle, yes, how to predict the next candle based on the retracement after any kind of reversal candle. Then the process of elimination, where the unfolding candle is telling you about something about the loss of momentum of any kind of trend. Yes, if a candle is not unfolding like you expect, then it's almost a sign that price will losing momentum, the trend will be losing momentum, and that there will happen something like a retracement or reversal. And then obviously the other most important part, the entry point. here to the entry point, I can say only if you wait for a rejection, wait for the rejection, you see a rejection, and on the rejection, you wait that price will move back above or below the previous candle closing price. Don't enter into the movement of this rejection because you will get almost a bad entry point. Do this only if you see strong pressure coming up. Then you can move with the river, yes, with the flow, yes. But I can only recommend not to enter on this first movement because that are those movements which are only there to trap those unexperienced traders, to get them in the worst possible position to get out of the money. I have explained this kind of concepts also much more in detail in the Price Action Bible for those one who are not willing or do not have the time to watch the videos. Yes, I have compromised everything in a few sentences and a few points: criteria, candlestick psychology, how to trade, and where to find the entry point, and so on and so on. So, and then obviously the last concept of those 5 which are really important too, because that is what it's about, how to the wave or how to the market is moving. The market is moving in a wave. That means that price moves up and down, and it's important that you understand the movement in the purchase time to expect those things which will happen in the expiration time. And every kind of trade has its own signature. That means that it depends from the right movement if this trade will go in the right direction, and if you are going in the money. You can trade also the other one direction, but you have to try to get the best possible entry point then, else you will get out of the money by hair, like I have explained so often, and I think you know about what I'm talking here. So obviously that are those one which you should cover, those kind of concepts. And then obviously if you are using the Bollinger Band and the EMA, how to read them. Yes, here I mean this one, how to read the Bollinger Band and how to read the EMA if you are using them. That is really important. For those one who are not able to spot and to draw the Fibonacci level, watch also the Fibonacci retracement and the Fibonacci extension. That are also almost important. So okay, I think that were already those one which are the most important concepts which you should cover, not only for the for your trading, also for the BOTT mentorship program and the application process. And now we are going into the trade, which I have done already, to so that I can explain you what I have done there and why. So okay, let's see. We have this kind of video prepared, or I have this video prepared, and you see we got here a pullback. Look at this, we have a nice uptrend, but this is not a strong uptrend, yes, because you see the EMAs are almost flat. The 200 is going flat too. Maybe soon the, okay, but the 100 looks like the 100 would cross the 200 too soon. Yes, that means that we are getting again into an uptrend. We are coming from an uptrend. Price is going to lose momentum. We got here a reversal. Then we got here a pullback on this kind of support and resistance level, which is determined by this one. Here we have nothing else than a resistance. And after this, we got the major support and resistance area, the change of polarity from resistance, it changed to a support level. Yes, and because this candle closes as weak candle, as doji, and price touched again this level, I entered immediately when price touched this level into a call to enter below the closing price, not below the closing, below the support and resistance level, to get this kind of margin of safety to close, to enter below the closing price of the previous doji. Yes, and that was the reason why I entered here, because market moves in waves. Yes, and that was this what I was expecting, a pullback from this kind of one deviation Bollinger Band or support and resistance level. Here we have a confluence, and that was the reason why I entered into a call. So let's see if I enter in the next trade. I will stop the video again and explain why I have took this, or why I took this. So okay, we'll do a little bit fast forward so we do not lose too much time here. Yes, market is doing here some kind of panic. Price tried a few times to go down further, but it got a rejection from this level. And in the last few seconds of the expiration time, price is moving in the right direction. yes, and is closing as a doji again, yes. So, and you see how important the entry point was. After this doji, I'm entering again into a call because now I was expecting a bigger candle than a doji, yes, because we have now here a triple bottom, yes. These dojis here are forming a triple bottom, 1, 2, 3, yes, that is triple bottom. And so that's the reason why I was expecting now a little bit larger candle than the previous one. Yes, because you know, triple bottom is the same like a double bottom. Yes, after this, there will happen most probably a trend. Yes, a strong trend. And that's the reason why I entered immediately into a call, because the previous 3 weeks are showing that we are going to continue. And we are obviously still into an uptrend, because you see the 20 EMA and everything is aligned upwards. So after this, yes, after this, let me see how this candle will finish. Yes, this candle broke the support and resistance level, yes, of the previous candle. So we are getting out of the range, of the box range. Yes, that is looking like this. Price is retracing back, and on the retracement back, because I was sure that price will continue to go going up, we are here still in an uptrend. On the retracement back, I entered into a call. That is what I have explained some of my students of the BOTT mentorship program. Yes, that price often, and that are the best trades, price is often retrace back to the support and resistance level. That are almost the tentatives of the sellers or the buyers to take control again over the market. And that will happen almost often. And that is also the reason why you get a retracement after an engulfing candle, or you get a retracement after an evening star, morning star. That will almost happen also because, okay, that was really close in the money. You see how important the entry point was. I entered immediately at the lowest point, and that was the reason why this got in the money. So again, that is the reason why at the end, at the evening star, morning star, or engulfing candle or pin bar will happen sometimes, some kind of retracements, yes, because of the pullback back to the support and resistance level. I have shown you this after a breakout. The next candle has to touch in any way the support and resistance level, and from the support and resistance level, price has to reject to enter into a trend continuation. Do not enter into a trend continuation when price is moving downwards. Yes, you have a breakdown. Yes, it breaks out downwards, and then the price moves downwards. Don't enter then into a trade, in a put trade. You have to wait that price goes up first, touch the support and resistance level, yes, and then entering into a put. So I entered here again into a call because I was still believing that price would not go down further because of this kind of support and resistance level, and that was the reason why I did a call, because I was still believing that price would go up, yes. And after this, now here, this candle showed me that price will not continue to going up, yes, because I was expecting some other kind of candle. I understood now that price will continue to going down against the support and resistance level again, and that was the reason why I entered here into a put, expecting that price would go down. I was maybe also expecting something like a double top, yes, but it looks like that price is still fighting against the neckline. Yes, and as long there is no sign, no candlestick like this one, or a hammer or something like this, or here some other thing like an engulfing candle or something, you cannot expect that the neckline will broken. Yes, and so I would not enter here after this weak candle into a put again. Yes, because there's a probability that the price will break through it really low, and that was it already. So if you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.